Good morning, everybody. Welcome to the game plan. My name is Gareth 𝗶𝗍𝗂𝗍, Chief Market Strategist and Master Trader here at Verified Investing and InTheMoneyStocks.com. This is the game plan. It's 9 a.m. We are going to get into it. So what we're going to do first is we're going to step over to this projector here, this computer screen. I'm going to look at the 10-year yield. Before we get into that, I want to say this. At 9:15 a.m. today, that's 15 minutes from the start of this broadcast, Jerome Powell is speaking. All right, I don't know what he's going to necessarily say. It's just a random speech, but ultimately I'm curious to watch, and we'll watch the S&P live to see if there's a reaction to what his comments say. Maybe there'll be a great trading opportunity right like that at that point. Okay. So basically, we have the 10-year yield sitting right on top of technical support right here. What I'm going to do today, so we talked about this yesterday, so I'm not going to go into this today. There's not a lot of changes, but what I wanted to do was do something different today. Let's look at the bigger time frame. So what I want to do here, guys, we're going to flip over to the monthly chart. Now, when we flip over to the monthly chart, we can clearly see that this was your decline from essentially COVID down to the lows when COVID hit, and then eventually we saw the reversal back up. And you can see that pattern, kind of like a cup pattern, a little bit of a handle right here for that secondary move to the upside. But let's go out even more. Let's zoom out even more. If we zoom out here, let's look at where rates have been. And basically what this is this is going all the way back to basically 1980 when the rates were literally 16%. So those of us that might be a little bit younger, maybe if you're, sub 40 years old, you weren't alive when rates were up to 16%, but it does put it in perspective when rates are back to 4.5 to 5%, where they are historically. The problem is this. People get used to borrowing money at certain rates. They basically have more money in their pocket when rates are low, and so when rates go up, it puts hardship on people, even if historically it's not necessarily where rates have been. People essentially adapted to rates down here and were spending as such. They got their kind of means larger and larger, and therefore it is a hardship even moving rates back to 5%. Now, interestingly enough, what I want to do now, we're going to erase this trend line right here, and we're going to just draw some other trend lines on the chart. So what I want to do, guys, is as we bring this into focus, I want to take a trend line, and I want to extend it down here. And I want to show you how charts even work with the 10-year yield, all right? So there's your trend line, and this trend line goes back to 1994. But what I want to show you on this is amazingly how you literally had a trend line here to here to here and right to here, and how when it got to that level, we saw rates get pushed down and pushed down. And look at what happened here. We saw rates dumping out during COVID and during that just post-COVID period. And then look at the move up and the breakout. And this has been a breakout in rates. Now, one of the things to remember is most people are expecting the Fed to cut rates over the next year or so. I think the first rate hike is projected now somewhere in May of 2024. Now, interestingly enough, is it possible for rates to come back? The answer is yes, but what we know on the chart is that your max downside is probably right around 2% on the Fed funds rate. Now, that's still a lot of cutting, so we could be in a very dramatic recession if rates go back to that level. But on a technical basis, that level now becomes support. And as we can see, this trend line has worked beautifully. So what's to say it won't work again? And meaning rates will bottom out at 4%. Now, let's extrapolate that thought process. Does that mean that the economy is doing great? Or my bigger concern is that if rates come back here, what do you think is going to happen to inflation if money printing and free money or low interest money is out there? Inflation's going to come back up. That's going to eventually cause the rates to have to go dramatically higher. And again, you have to wonder if we're repeating what happened in the 1970s. In the 1970s, we had inflation go like this, then it came down sharply, and you know what happened? The Federal Reserve back then started to lower interest rates too quickly, and inflation ended up going up and making a new high before rolling down like this. And so you have to wonder if this is telling us exactly that, right? Let's think about that. Doesn't this potentially pretend to essentially be that same sort of thing, where we have this scenario where we're going to see rates come in, but then have to go up because inflation is going to go up like that. And that's very interesting on the charts to take a look at. Okay, let's look at the US dollar. I'm going to do the same thing. Dollar's bouncing a little bit today. I'm still waiting for the Jerome Powell to give his speech today. I will keep you posted on that as soon as I see any price movement. We're going to get into earnings this morning. We have some good stocks making moves, so we'll go into levels on that. But again, same kind of deal here. What I want to do is I want to flip out to the larger time frame on the dollar and kind of dispel some narratives, right? So again, the narrative has been that, hey, listen, there is de-dollarization going on, and the dollar is collapsing down, or will essentially just keep going down. And when you look at this chart, you really don't see that in a shorter term basis, maybe over a really long period. But again, if you look at this, in 1998 to 2000, the dollar was right here, and look at where we just got to on the US dollar about a year ago or so. We basically are at the same level we were 20 plus years ago in terms of the dollar. Now, I will say this, is if you look at the longer trend line, you do see that you are making a high, lower high, and basically an equal high, maybe slightly lower high. So I think over the longer term, the dollar does continue to weaken. My guess is eventually the dollar comes down like this, makes a lower high, and goes like this. But remember that this isn't something like if you go on crypto Twitter, right, or if you go on Twitter, FinTwit, all that kind of stuff, you would think that the de-dollarization is going to make the dollar go from where it currently is to zero, like right here, right? To literally zero in a month or in a year. That's not going to happen, folks. These type of maneuvers where currencies kind of lose their reserve currency status and depreciate, it takes really long periods of time. So do I think that slowly that's going to happen? The answer is yes. And in fact, it probably speeds up a little bit from here because of the amount of debt the U.S. has. But it's still going to take decades. It is still going to take decades, and you have to understand that aspect. All right. Let's get into some charts here. UPST, guys, take a look at UPST. This stock is getting crushed. They missed earnings yesterday in the after hours, basically closed in the after hours upwards of around $29. It's trading at just below 22 right now. Now, the key on this is this, guys, is that this stock, if we go to our daily chart and we flip over to our daily, the chart actually has a downsloping trend line that is kind of interesting, right? So if we look at this, we see low pivot, low pivot, low pivot, low pivot here, low pivot here, low pivot down here, and guess what is right down here? That level happens to be, and if I move my mouse on my screen here, that level is right below $21. It's around $20.50. So per this chart, there should be some support around $20.50 to about $20 even number. All right, so somewhere in that vicinity, there's going to be some technical support. Now, if we flip out and we move to a bigger time frame where we can see, so what I always want to do when I'm looking for these levels, I'm looking for a confluence of levels. And what I see here is that there is a pivot point. It's not exact, but you have this area here, this area here, this pivot here, right through this area here, and it's also coming into that level. So if it's me, I'm looking at this at probably a pierce of $20 and, to accumulate it down in that range. I even think it could be an interesting swing trade. This is an AI play. So again, discount. I mean, look at this thing. This thing was a $75 stock at one point not that long ago. In fact, this was this year. It was 75. Now, if it gets sub 20, I do think that it's an interesting accumulation play on a slow basis. Dollar cost average slowly as it drops. Maybe it goes to 15. Who the heck knows? Maybe it goes to 10. But if you start below 20 and you do it every couple dollars down, you can probably get a good dollar cost average on something like this. Let's talk eBay. eBay is getting trounced last I saw. It is. Take a look at this. eBay basically closing around $40.75, trading at $37.33. Where is your technical level on this chart? Basically what we can see here, I mean, this is about as simple as it gets. You have a technical pivot low. This would be a double bottom at around $35. So right down here, there'll be some support around $35 if it gets there. This I like as more of a day trade. I don't really like it as a swing trade because if you zoom out on the chart, you can see that it actually has lower pivots. I like buying stocks for swings that are kind of at their lower end. And what we can see here is that even at that double bottom, you've still broken a longer term trend here, right? So if we look at that, look at that. So you've actually broken this, which on a swing basis tells me it could end up going lower. So we're now trading down here on that chart. So yeah, you're going to get a double bottom somewhere in this vicinity for maybe a quick bounce, but my guess is you could be headed a little bit lower there overall on a swing basis. And by the way, the fact that eBay is suffering today, it could tell us something about the consumer, right? So we're seeing more and more of these consumer stocks starting to give warnings, starting to say, hey guys, the consumer is not as healthy as they were over the last 6 or 12 months, and that may tell us that we are slowly seeing that economy slowing, which again, could be, again, going back to the rates continue to dip, maybe back to the scene of the crime like we just showed. Rivian, guys, Rivian, again, is trading up a little bit on the back of earnings here. If we go to that chart here, yesterday it looks like we closed right around 17 and change. We're at 1850. Rivian actually had good solid numbers, which was kind of a change for a lot of these newer EV companies. So based on that, is there a trade here? It's not up that much, so I'm not really super pumped about it. There is a gap fill all the way up around 24, but that's a million miles away on the chart. But again, for me, this is a heavily shorted stock. I'm very cautious when stocks like this start to rally, because a short squeeze, if it comes in, can crush your portfolio if you try to short it too soon. So for me, I would start looking 24 bucks maybe if it gets there today. This would be a day trade only. Otherwise, I'm going to pass on this one because of the risk factors that are involved. Let's talk Roblox. Look at Roblox, guys. From $35 per share this morning, reporting earnings better than expected, trading at $41.45. Flipping over, by the way, 2 minutes away from the Fed. I'm going to bring up the S&P in just a second. We'll take a look at that. I'm not going to know what he says, honestly, during this, but that's irrelevant, to be honest. It's about what the market does off of his comments. All right. If we flip over to the daily chart, right? So again, we're trading per this chart $41.33. Where would be a technical level of resistance? To me, there's a high risk level, and I'm going to show it to you here, right? So if we take a trend line and we take this pivot high and we drop it to this pivot high and this pivot high, look at what ends up happening here. We can extend that trend line out. It gives us an approximate target of around $43 per share. So again, just to go over, pivot high to pivot high to pivot high, 43-ish appears to 43. There should be some resistance on Roblox. Now remember, Roblox is another heavily shorted stock, so that would be a high risk level. Following that level, you can look for this area right here around 45 to 46, and even here around 47. These will be secondary resistance levels on the chart. All right, now I did think Lucid also reported earnings. It's down on the day. I looked at it. I don't see any sort of numbers. But let's quickly flip back to the spiders and the QQQ here. Let's jump to the spiders. Let's see what's going on. Looks like so far pre-market, not much is going on. This is where we closed yesterday on the SPY, which is the S&P. And it looks like for the most part we drifted. Now we're starting to float up. But I'm not seeing any sort of big movement yet that would denote a major comment by Federal Reserve Chairman Jerome Powell. Sometimes the comments get released early. I heard he was speaking at 9:15. We still haven't seen anything, so maybe there's no preliminary comments here. Let's jump over to this screen over here. As long as we're waiting, I'm going to keep that up on the far screen, guys. In fact, bear with me here. I'm just going to do that so I can actually see. Sorry to the camera crew that's got to keep track of me here. But looking at oil, this is an interesting chart, guys. And again, I will be watching the S&P here over the next minute or two. But oil was starting to dip again. I have a potential buy level on oil for a quick swing trade or day trade if it dumps out heavily. Now, ultimately, we know that the head and shoulders, you drop a plumb line here. From this neckline, you drop that same plumb line. Your target is around $68.50. That would be a completion of the move. However, along the way, there will be opportunities to play quick trades. One of those trades, folks, is going to be at this approximate level. I'm going to give it to you guys right now, and you'll see once I draw it in how I get this trend line. Draw this trend line right across, and it's at around $74. Do you guys see how I got that? Basically, see all this sideways chop, how you kept on hitting here, 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 and then right here, you backed before you broke out, then you did a retrace to the scene of the crime. You went above it, you came back into it right there, right? Then we had the head and shoulders form. Well, guess what? That tells me this $74 level could be a support level on spot crude, on WTI, and again, that would be the level to watch. Looking at the S&P on the other screen here, guys, it's upticking a little bit. So far, not enough to get me interested in any sort of major statements by Jerome Powell. It is technically after that time now, so again, you got to assume that he either is talking or his comments are already out. Flipping back to gold real quick, guys. Gold is pulling back a little bit. Remember what I talked about yesterday? I said to you guys that you could see a pullback on gold as much as down to this level, and that would be very normal. So again, any sort of thing like this, sideways consolidation, or even more of a dip down here, the key would be for me, I would like to see 1885 hold. On a technical basis, that would be what I would want to see hold. That would be a buyer's level if you haven't gotten in gold. 1885 to 1900 would be a good level to look for that next leg to the upside that I do think, by the way, is coming. Let's talk copper. So copper's a fascinating chart. So I want to show you a large time frame view of copper because it is an amazing big channel, and I always marvel at how the channels work, right? So you would think that charts are arbitrary, that they kind of depend on news, depend on this, and depend on this. But when you look at a chart like this, going back to 2000, man, how far back is this channel going? 2006, right? So you're back to 2006 over here. You have to start to say, wait a minute, this isn't necessarily arbitrary. It's not random, because you can clearly see that every time we kiss these upper levels, you're pulling back, and every time you've hit this lower level, you've gotten a bounce. And this is, again, going back 18 years, guys. That's amazing. So what's interesting here is that at some point, you can see this wedge pattern. At some point, you will break either up here, in theory, right? The idea is, if we look at this chart, logic and probability dictates eventually you either get to the low end or the high end of the channel. So the question then becomes, with this wedge pattern, which way are you going? And to figure that out, let's zoom into this wedge pattern and see what has happened. So we'll go back to the daily chart. Here is the wedge pattern. Okay, boom, right there. Now, what's amazing here, as I step over to this side, is that you basically have a beautiful wedge, which the lows working perfectly here, the highs working perfectly there, and eventually what happened? Right here, guys, you broke down. So what does that tell us? What does logic dictate? It tells us that we likely are going to see eventual movement to the low end of the channel on copper. Now, notice what copper did here. I'll try to zoom in a little bit here on this as well, just because I want to use this for teaching purposes. Bear with me as I zoom in. Okay, so we're zooming. In we go. And what we can see now is that we have a breakdown below this area, and we've retraced. And my thought process is this. We probably come back to the scene of the crime, and then we get our next leg to the downside. Okay, so again, that would be my expectation of what's happening. You can already see the retrace is almost complete. Now, let's talk about economics. What does this tell us? Well, it probably tells us that, and it makes perfect sense, that you're getting this retrace because the thought process is, oh, we're going to get a soft landing, maybe no landing, the economy's going to be great here, the Fed's done hiking rates. The problem is, this chart, which is copper, and copper, again, dictates economic growth, global. If this starts to break down, it's not breaking down because the global economy is doing well. I'll guarantee you on that one. And so if this chart is a predictive chart, which I look at it as a predictive chart, it tells us we will enter a pretty rough recession at some point, and it'll be a global recession because ultimately, you know where we have to go? You guys know. We eventually have to go down here. And if copper's going to trade down there, it's not going to be pretty. Not going to be pretty for the economy. All right, spiders again upticking. So we got a little bit of a bid on the spiders. Honestly, not enough to make you guys pay attention. We got too many more important things to do. I only have a couple more minutes anyways. So let's quickly go into a couple final charts. Bitcoin, I want to show you guys this. This is that channel from yesterday I adapted it slightly, but just notice that we're still stuck in this channel here. Look at this, and then look at low end, low end, low end, low end, and then we tagged it here. What I find fascinating is this, and I'm going to throw this out to you guys. Every time we hit this low end of this, we're getting these someone's coming in and buying. And I'm not going to pretend to know who it is, but it is interesting because yesterday we were hammering on this level and all of a sudden we got this huge pop, well, relatively huge pop in Bitcoin, and now Bitcoin's kind of gone back in the middle of this channel. But again, my point remains as of yesterday as well. If we break below this, that's trouble. As long as we stay in this, you stay bullish on Bitcoin in the near term. If this level breaks, which again is just below 35,000, that's where trouble can ensue. All right. Natural gas, excuse me. Natural gas, guys, quickly here. Again, continues to come in. Remember, our technical level for natural gas here is right here. And again, beautiful pullback. I do think it continues. You might get a bounce day here and there. That's normal after multiple down days in a row. I want to show you this next chart. This is the NASDAQ chart. Now, we just talked about going to bigger time frames. Excuse me. Notice the NASDAQ is now up 8 days in a row. That's the first time in years that has happened. Very rare. Probabilities continue to signal at some point we should see a pullback here. Okay, but again, look at this trend line here that I'm looking at. Pivot high, pivot high, pivot high. That could signal this is where we're headed, which is around 13,750 on the NASDAQ 100. We're still about $100 away from that on the NASDAQ. Look at the low end right here, all right, and right here. Now, you might say, well, you know, parallel lines, where the heck does this go to? Where does it go to over here? Check this out, guys. Look at where I found this parallel from, okay? Literally, we flip to here, we zoom out, and look at that. This parallel goes back to the all-time highs. This hit and this hit create the low level for the market hitting right there. That's interesting to me. Then the high end. So again, we might get up a little higher. We should then start to pull back, I would think, on the charts. All right. Lots to go over, guys. Bring it back center. All right, so again, Jerome Powell, so far a non-event. S&P, again, spiders up just fractionally in the pre-market here. Looks like we're trading up about 50 to 75 cents on the SPY. So again, slight positive bias off of his comments. Remember, there's a gap fill on the spiders at around 438. I went over it yesterday. I didn't have time today to go over it. So let's see, 438.50, I think, is the level. I want to see if that gap can get filled. We're like $1 away right now. If that gets filled, that's going to be a key level for this market to deal with. I'm positioning myself for a pullback in the markets off of that level. I've been slowly the last couple days inching in on the short side, just dollar cost averaging. I may be wrong. We'll find out, but that's the way I'm positioning myself at this stage. All right, you guys have a wonderful, wonderful rest of your day. I appreciate your time here this morning. I will see you tomorrow at 9 a.m. Gareth 𝗖𝗶𝘁𝗍 from Verified Investing. I'll see you then on the game plan. Take care.